back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. All right, guys, let's hop into the charts. And currently it's June 2nd. It's about 4:06 p.m. Eastern time. Candle closes in about 4 hours for the daily. We're going to start off here with the weekly. And yesterday we had the weekly candle close. And as you can see, we had a red engulfing candle. This is bearish. The stochastics here are toppy, and if we zoom in, they're looking to start curving down like right away. It doesn't even look like they want to drag up here for a little bit, but that's already looking very bearish to me. And this new weekly candle is red. We do have 6 days left before this closes, but it's already not looking good. We are far away from the 21-day moving average, which is at 94,369. The only possible scenario that I could see is if we start just flagging out, going here sideways, and let the 21-day moving average catch up to price, and then maybe from there we could go up. If not, I'm looking for an M pattern to form here, or bullishly it could be an inverted head and shoulder if we start making the right shoulder now. See what ends up happening with that. The 2-week, it was bullish for me. The stochastics were on the way up, but look, now I'm starting to see a little curve here as well. So we still have about 6 days before this candle closes as well, so it's a little bit too early. We look at the stochastics on the 6-day, on the 5-day, 4-day, they're all toppy. On the 3 days, toppy is already coming down. Huge red engulfing candle here that we had on the last 3-day candle. In the 2-day, we're down, but we still have to roll over. We could still continue dragging here for a bit. The only thing that I'm seeing bullish here is that we are still above the 21-day moving average, but this candle closes in about a day, and so far it's turning into a red engulfing candle. We take a look here at the daily. The daily stochastics are low. They could start curving up at any moment. Of course, we could still drag here. We have the golden cross here that we're hoping that's going to help us, but we are below the 21-day moving average, and I'm not liking that. We did make it to the bottom of the 21-day moving average, but now today, again, this candle closes in about 4 hours, looking like a red engulfing candle here that could continue to bring us down. Now, there's a couple things here that I'm not liking. The first thing is this could end up being a head and shoulder here. That's the shoulder. This is the head, and this could be the right shoulder forming now. If that would be the case, more or less the measured move would bring us pretty much to this 200-day moving average, or probably even lower. And the 200-day moving average is at 94,908. If we lose the 200-day moving average on the daily, I have to get bearish at that point. Now, another scenario that I'm also seeing here is this kind of looks to me like a bear flag here as well. Now we continue tracing and continue going sideways here, and if this ends up being a bear flag, the measured move would be below the 50-day moving average, that's for certain. That will be more or less like around 97k, and it could probably take us to the 200-day moving average as well. By that time, the 200-day moving average would probably move up a little bit and we'll meet it. So those are two cases where it's looking bearish for me. The only thing that is going to save us is if these stochastics start coming up and we get above this 21-day moving average. This is very important. We take a look at the 22-hour chart. The stochastics are looking to roll over. Yesterday, I went over the stochastics of the lower time frames. They were all low, but if we look at it now, look at the 12-hour is looking to roll over. The 10-hour was on the way up. Now it's going sideways, looking to roll over. Same thing for the 8-hour here. So now we head over to the 4-hour chart. The stochastics were toppy. We had this bullish divergence here, and we got above the 21-day moving average. But then look at this huge red engulfing candle made us go below the 21-day moving average, and now we're currently trying to see if we could get above it. We still have about 3 hours and 45 minutes before this candle closes. This is also going to be a very important candle here. What's bullish is that the stochastics look like they want to turn back up, so this is possible. Yesterday I left you guys with the notion that it's possible we go up to this 50-day moving average, which is at 106,704. So I'm seeing a move maybe to 107,000 is possible, but let's see how this plays out. This could always roll over. And if I put on the patterns that we had here, I have the 4-hour currently in a falling wedge, and it should break us out to about 114,000. So far we've been holding above the 200-day moving average, which is what's important. If we lose this 200-day moving average, this yellow line, again, again, I have to get bearish. That means we're going to possibly get a bigger dump. We already lost it here on the 3, so we must reclaim this as soon as possible. This is a good sign that we're reclaiming the 21-day moving average on the 3 hour, but we have to get above this 200-day moving average on the 3 hour, on the 2 hour, and on the hour as well. Yesterday, it was a little bit bullish because we got above the 21-day moving average. I was hyped for that, but then look, a topping tail. Look at this big wick, bearish hammer all the way down. Red engulfing candle, we got below the 21-day moving average. Now we're currently trying to get above it. This takes 47 minutes from the time of this recording to end for this candle to close, so let's see where that ends up. But the stochastics are looking possibly to roll over. So let's take a look at the 15-minute chart. Yesterday I left you guys with a weird little pattern here, so I just wanted to go over that real quick. And that weird pattern was right here where I was giving you 2 scenarios. I thought that this could have possibly have been a M pattern that would have brought us pretty much outside of the falling wedge, probably to like 103,000, or it could have been an inverted head and shoulder that would have broke us up to the top of the pattern, and that's exactly what it was. This ended up being an inverted head and shoulders. So for that weird pattern, those 2 options, one of them did come out, but ever since then we've been bearish again on the 15-minute. We've gotten below the 200-day moving average, below the 21-day moving average. Now currently we're trying to see if we can stay above this yellow line, the 200-day moving average. Now guys, overall, same thing as yesterday. I'm feeling like we're going to be ranging between 103,000 110,000. Currently Bitcoin has been maintaining its level of at 104,000. It's gotten to 105,000 a couple of times, but it has not been able to maintain it there. There's a lot of things that are showing me that we're possibly going to go down lower, and I could see us going down as low as 98k, even 94k, if we're not careful. So let's see how this daily candle closes, and let's hope that we can stay above the 200-day moving average on the 4 hour. All right guys, that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.